how are we going to maintain an above trend level of economic growth? How are we going to maintain a robust level of economic growth if we have a net negative shift in immigration policy that reverses the positive labor supply shock that contributed to the resiliency of the economy over the past a few years? So I think investors need to be very aware that there's a lot more economic risk associated with the Trump administration's policies than I think is bandied about. We all know that tax cuts and deregulation is coming. That's bullish. We don't need to tell. I don't. You don't need to listen to me tell you that. That's obvious. What you need to listen to me tell you is what's not obvious, because it may cause problems in asset markets, and what we're talking about in the left tail risk section. And then so the key takeaway here is the incoming Trump administration will be more friendly for asset markets. Sorry, my apologies. Let me read that over. The assumption that the incoming Trump administration will be more friendly for asset markets than the outgoing Biden administration from this starting point, particularly where we are in the positioning cycle, is a dangerous assumption. That's a dangerous assumption. It's not like the Biden administration, was bad for asset markets. It was bad for, working class people in America, as evidenced by the bright red electoral college map on November 6th. But it was not bad for, the people at the top part of the K, the people with asset holders. If you look at the return of the S&P 500 throughout the Biden administration, from index to his inauguration date, up 58%, which compares to up 67% for Trump for his entire presidency. We're literally tracking right on the same level. And so if we, again, investors need to be aware that it's not like you can have, especially if you're a Republican, or, you live in the Ronald Reagan dogma. I'm not making fun of you at all. I'm just saying, if you're naturally going to be inclined to say everything's all better now, right? That's your natural gut inclination, and from an economic standpoint, it probably will get better. And at least it's what we saw in 2016 through 2020, or prior 2016 to, let's call it, end of 2019. Things got a little weird in COVID, but we'll ignore that. The key takeaway is that the markets have done quite well. The rich people in this country have done quite well in the Biden administration. And you can layer on where we are in the positioning cycle, which you guys can obviously very clearly observe in our leadoff morning notes every day, or in our Around the Horn, or in our quantitative risk management summary. From this starting point in the positioning cycle, assuming that our triple S's theme with respect to the size, sequence, and scope of policy implementation is just going to be a ubiquitous straight line up, I think it's a real dangerous assumption. Again, we're exiting a regime where that was incredibly favorable for asset prices. We're exiting a regime that was incredibly favorable for rich people, the top part of the K, the asset holders. And so, transitioning to the next regime, just change in and of itself could cause problems in the context of where we are in the positioning cycle. So that's the key takeaway from this slide. That's the key takeaway from our left tail risk section in the context of our triple S's theme. We're concerned about tariffs potentially causing a strong dollar, which would ultimately exacerbate the global refinancing air pocket that there is a reasonably elevated risk of here in this year. And they were concerned about how immigration policy might contribute to a stickier and stickier inflation, and ultimately stagflationary dynamics in the economy through the lens of reducing the available amount of labor supply, which would restrain growth unless you had a productivity miracle, which obviously none of us has an ability to forecast. So we can hope for a productivity miracle, but the reality is, in the absence of a productivity miracle, you can make the case that the immigration policy from the incoming Trump administration is probably going to cause a stagflationary shock to the U.S. economy, alongside potential tariffs, which could then exacerbate the global refinancing air pocket that we could potentially be heading into in 2025. So didn't want to scare you. Hope I didn't scare anybody. That wasn't the purpose of the left tail risk section. The purpose of the left tail risk section is, again, to help you get fully abreast of the full distribution of economic outcomes, as we always are trying to do for you here in these macro scouting reports.